If you've ever opened a stock report and thought, okay, where do I even start? This video is your map. I'm going to walk you through every section of a Stockcaster.AI report using this Verizon report as the example, and I'll show you how to read it whether you're a long-term investor, a swing trader, or you just want a quick confidence check. You can find other sample reports at Stockcaster.AI/samples. This header is your at-a-glance dashboard. It tells you when the report was generated and the price timestamp, so you know how fresh the numbers are. The ticker, sector, and industry, so you understand what kind of stock this is. The current verified price. Here it's $44. Recent corporate actions. For example, a merger, stock splits, or other actions that significantly impact the price. The rating, which in this report is buy. The risk profile, in this case, 5 out of 10, which is moderate. Lastly, the market cap. For Verizon, it is currently at $173 billion. Section 1 is the executive summary. This is the fastest way to understand the thesis. It usually answers 4 questions. 1. Where is the stock trading versus its range? 2. What just happened recently? 3. What's the forward outlook? 4. What's the bottom line score? In this report, Verizon is shown trading at $44.24, inside a 52-week range of $37.59 to $47.36. That's the context. Are we near the top, near the bottom, or in the middle? Then it calls out key business drivers, like strategic moves and performance. Here it highlights strong recent results, revenue and EPS beats, and a notable 616,000 postpaid phone net additions, plus forward guidance for EPS and free cash flow. Next, look for the strategic verdict score. Here it's 78 out of 100, which is basically the Stockcaster's blended confidence score across fundamentals, strategy, and risk. And finally, the summary boxes show the practical snapshot: dividend yield, forward PE, 12-month target, and upside potential. These are the key investor math anchors. Our plain English rules for this section: if you're an investor, focus on yield, valuation, guidance, and the thesis. If you're a trader, focus on target price, support, resistance level, and the risk score. Section 2. This is the environment check. Verizon is a high dividend, higher debt type of stock, so interest rates matter. The report explains the Fed backdrop and why rates can affect both Verizon's debt costs and how attractive its dividend looks versus bonds. Then it zooms out to the industry, revenue trends, competition, and who has share. This report lists Verizon as the revenue share leader, with T-Mobile and AT&T close behind. This helps you understand: is the company winning customers, defending pricing, or fighting a price war? In English, use this section to sanity check your thesis. Even a great company can struggle in a bad environment. If rates are rising, dividend-heavy stocks can trade differently than growth stocks. That's why this section exists. Section 3. Fundamentals. Fundamentals are revenue, earnings, cash flow, and guidance, the real-world business engine. Here, the report summarizes recent quarterly performance and whether results beat expectations. 2 numbers you might anchor on in a report like this: free cash flow, because it helps support the dividend and debt management; forward guidance, because stocks usually trade on the future, not the past. In the report's outlook, it calls out projected postpaid additions, service revenue growth, adjusted EPS range, and free cash flow targets. This is where you ask, do I believe they can hit these targets? Then you get valuation. This is the price you pay versus peers. Here, Verizon's forward PE is shown at 8.84, notably below the industry average referenced in the report. This is the classic value question. Is it cheap for a reason or cheap by mistake? Section 4. Technical analysis. Technical analysis is about what price is doing: trend, momentum, and key levels. This report describes a bullish trend setup, including moving averages and a golden cross type confirmation. Here's how to read moving averages. If price is above rising moving averages, that's generally bullish structure. The report lists the 200-day moving average and other key averages so you know where dynamic support might be. Next, support and resistance. The report highlights support around $42, $42.50, and resistance around $45, with higher targets above that. These levels give you an indication of whether the idea was correct or not based on the level holding or breaking. How to read it? Support is where you look for buyers. Resistance is where you expect sellers or profit-taking. A stop-loss suggestion is basically the report's invalidation level, the level where the bullish thesis is considered broken. Section 5. Sentiment and derivatives. This is where the report checks what the market is betting, especially in options. A key metric here is the put-call ratio. The report shows a low ratio, 0.2367, which is presented as bullish sentiment, meaning more call interest relative to puts. Then it mentions implied volatility, notable strikes, and things like a maximum pain. These are useful for short-term context, especially around option expirations. It also shows institutional ownership. Here it's 66.95%, plus buying-selling activity. Think of this as who's in the stock and are they adding or trimming. Sentiment is supportive, but sentiment is not a guarantee. Use it as one of your confirmations, not as the entire reason you enter a trade. Section 6. AI/ML Predictive Modeling. This is one of the most important mindset sections. AI/ML here is about probabilities, not certainty. The report compares historical pattern occurrences. For example, how often a similar setup led to higher prices over 90 days. Then you get scenario forecasting. Bull, base, bear, with probability weights and targets. This is extremely helpful for planning because it forces you to think in ranges. Bull case target around $51, base case around $47, 43 cents, bear case around $39.20, and each has a probability attached. Finally, the ML model outputs time horizons with confidence intervals, like 7-day, 30-day, 90-day, and 12-month ranges. The key is not the single number, it's the range. That range tells you what normal variation might look like while the thesis plays out. Best practices. Use the base case for planning. Use the bear case to decide what you can tolerate. Use the confidence interval to avoid panicking on normal volatility. Section 7. Risk management. This section tells you what could make the report wrong. It typically includes technical risks, key support breaks, trend invalidation levels, fundamental risks, competition, execution risk, dividend sustainability, event risks, earnings dates, Fed decisions, regulatory headlines. In this report, it explicitly calls out a key technical risk, losing the support area and what a breakdown would imply. And here's the simple summary. Risk score 5 out of 10, meaning moderate. Not ultra safe, not extreme, right in the middle. Section 8. Strategic recommendations. This is the action translation. The report usually splits it into long-term investor approach, position size, time horizon, where pullbacks might be attractive, tactical trader approach, entries, stops, targets. Here, it gives a long-term style framework, like a core position size range and a focus on pullbacks into support. And for traders, it gives specific levels, suggested entry zone, a stop, and multiple targets. The important part isn't copying it blindly. It's understanding the structure. Entry, validation, targets. Option strategies. If you trade options, this part gives strategy templates and the key things you need to compare. Max profit, max risk break-even, and a stated win probability. Even if you don't trade options, this section still has value because it shows where options markets are concentrating strikes. That can align with support-resistance levels. Section 9. Conclusion. How to use the report in real life. The conclusion is the thesis in final form. What's attractive, what the risks are, and the target. Here it reiterates the strategic investment score of 78 out of 100 and the 12-month target of $47. Our recommendation for using any Stockcaster.AI report is this. Read the header and executive summary first. Decide. Are you going to be an investor or trader? Use fundamentals to decide if you believe the story. Use technicals to decide where your validation is. Use AI scenarios to decide how wide your expectations should be. That's it for the Verizon Report walkthrough. We provide a daily market report every night, and you can have it for free. All you need to do is go to Stockcaster.AI and sign up. Remember, Stockcaster does not provide financial advice. Manage your risk. Like and subscribe for more content.